and Bitcoin as collateral. It's actually a brilliant collateral because, it trades 24/7, 365. There's a global clearing price, and you can actually automatically claim the collateral. You can set up arrangements that automatically execute against risk positions. So I think you're going to see Bitcoin emerge as a major macro asset. I will say, even today, 9 of the 10 largest hedge funds in the world have positions in Bitcoin, and they're doing various sort of macro-related trades. Maybe they're financing it against Bitcoin futures, or maybe they're using it as a tool. You're also increasingly seeing, when major international news breaks over a weekend, that traders, and not just crypto traders, but traditional macro traders around the world, are turning to Bitcoin because, of course, it trades 24/7, 365. So, when some of the Trump tariff news came out, see spikes in volume for Bitcoin. So I think it's becoming a major part of sort of the macro trader's toolkit.
Matt Hougan makes the audacious and topical claim at the outset that Bitcoin isn't a danger to the financial system. Rather, it may be its only hope. Growing debt, unmanageable deficits, and a Federal Reserve increasingly constrained by its own previous practices are all contributing factors to the U.S. precarious position. Bitcoin, in particular, according to Hougan, may provide the required release valve. Bitcoin serves as a decentralized check on fiscal irresponsibility and an escape route, whereas the existing monetary system is more inclined toward money printing and financial repression. Hougan cautions that neglecting this lifeline would hinder America's financial dominance internationally and accelerate the dollar's downfall. If you're intrigued by bold predictions and deep financial insights, make sure to like this video, subscribe to the channel, and turn on notifications for more engaging content. Thank you for your support and enjoy the video.
And in a world that's increasingly Bitcoinized, is it de-dollarized? Can these things converge? Can they coexist? What does that look like?
So my great hope for the dollar is that Bitcoin acts as a sort of governor that prevents further abuse of the dollar, right? Bitcoin is the alternate road that we don't have to take if we treat the dollar well. The dollar is a great tool for global markets. It has been for many years. As an American citizen, I wanted to continue to play that role. But the US has built up $37 trillion in debt, has a $2+ trillion annual deficit. We print money like crazy every time there's an economic crisis. We seem to have sort of outlawed recessions in the US and instead use the money printer instead. If that persists, then absolutely, I think the world may move into alternative primary currencies, and Bitcoin could be one of them. But my great hope is that the existence of Bitcoin sort of haunts the central bankers and Treasury and prevents them from overly abusing the dollar. It's worth noting, pre-Bitcoin, the dollar had much more scope to be abused by US government officials because there was no alternative, right? It was the cleanest dirty shirt by a significant factor. And if you don't have an alternative, it's just so tempting to abuse it. I think the growth of Bitcoin as an alternative could be one of the things that saves the dollar long-term, because it tells people you can't abuse this too much. You have to keep an eye on this alternative system. And then if they do, yeah, I think Bitcoin will play a bigger and bigger role in the world. And that's what we've seen over the last, handful of years. If you imagine that it's possible that the US dollar loses its place as the only reserve currency of the world, you have to ask what happens next. The most likely outcome would be we move to a world with the US dollar and the yuan playing contrasting roles. That's actually not a good outcome for the US. We'd rather move to the US dollar and an apolitical alternative. And I think the value of a strategic Bitcoin reserve that skeptics don't see is it makes it more likely that that is the outcome if we, in fact, go down the path where the US loses its sort of hegemonic role as the only reserve currency. We're already seeing it move in this direction. We've seen a huge growth in the derivatives market surrounding Bitcoin. We've seen, massive and continuing growth in options and futures. You're seeing significant growth right now in Bitcoin lending and Bitcoin as collateral. It's actually a brilliant collateral because, it trades 24/7, 365. There's a global clearing price, and you can actually automatically claim the collateral. You can set up arrangements that automatically execute against risk positions. So I think you're going to see Bitcoin emerge as a major macro asset. I will say, even today, 9 of the 10 largest hedge funds in the world have positions in Bitcoin, and they're doing various sort of macro-related trades. Maybe they're financing it against Bitcoin futures, or maybe they're using it as a tool. You're also increasingly seeing, when major international news breaks over a weekend, that traders, and not just crypto traders, but traditional macro traders around the world, are turning to Bitcoin because, of course, it trades 24/7, 365. So, when some of the Trump tariff news came out over Saturday and Sunday, you see spikes in volume for Bitcoin. So I think it's becoming a major part of sort of the macro trader's toolkit, and it is becoming increasingly financialized because it's such a great tool to express views in the short term, particularly when traditional markets are closed. If you're looking at one-day correlations during sharp risk-off moments in the market, like let's say days when equity markets pull back by 2% or more, Bitcoin tends to fall as well. Our study shows that over the last decade, when the S&P 500 falls 2% or more, on that day, Bitcoin tends to fall 2.6% on average. So not just correlated, but amplified. But if you look at 90-day correlations, or you look at 180-day correlations, it's actually almost never been above 0.5 on a 90-day correlation over its entire 15-year journey, including right now. And to me, this is where you get a disconnect between what the media reports and what an institution should think about. The media reports that it has high correlations to stock markets because during these shock moments, that's when the media pays attention. But institutions are investing for years, and the data just simply suggests it's always had a low correlations to stocks and bonds over any meaningful time period. And that makes sense because, again, what drives Bitcoin is different than what drives stocks, and that's what leads to correlations. So the answer to your question is, from our perspective, it's a low correlation. It's never really been above 0.5. I don't think it ever will be because I think the drivers are just fundamentally different.
According to Matt Hougan, Bitcoin's current valuation of just under $2 trillion may only be the beginning. Hougan thinks that if Bitcoin continues to expand at its current rate, its market capitalization might tenfold or equal that of gold during the next 10 years. Bitcoin would still be in the early stages of acceptance even with a lower 5 times move. Additionally, it has never been easier to invest in Bitcoin thanks to the introduction of spot Bitcoin ETFs. According to Hougan, the way these ETFs operate is that when investors contribute, firms like Bitwise collaborate with significant market makers like Jane Street, Susquehanna, DRW, and Citadel to buy actual Bitcoin. Trusted custodians like Coinbase then safely store the Bitcoin in cold wallets. To remain up to date on the most recent developments in Bitcoin, cryptocurrencies, and the digital economy, please take a moment to like this video, subscribe to the channel, and enable post notifications.
Maybe first I should say why Bitcoin has value, because I think a lot of people ask, why isn't it just Beanie Babies or tulip bulbs? And the way I answer that is I think Bitcoin just provides a service. The service it provides is the ability to store wealth in a digital format without a bank. And if you want that service, the only way you can get that service is by buying Bitcoin. Usually with technology services, you pay a subscription fee, right? Like we use Salesforce at Bitwise to track our sales activities. We pay a subscription fee to Salesforce, and therefore Salesforce has value. Bitcoin also provides a service, again, the ability to store wealth without relying on a bank in a digital format. But you can't pay a subscription fee to Bitcoin because that's actually nonsensical. There is no Bitcoin Corp. The only way you can access this service is by buying Bitcoin itself. That's why it has value. The more people who want that service, the more the value goes up. The way I value Bitcoin, because it doesn't have cash flow, is I look at what I think its addressable market is. And a reasonable proxy for its addressable market is the gold market, which is a 21 trillion US market. Bitcoin is a little under a $2 trillion market. And so you ask yourself, do I think Bitcoin could eventually match gold in a store of value market? Do I think it could get to $21 trillion? My answer is, I think so. Over what time period? Let's say 10 years. And then how much do I discount backwards, each year to get to the net present value? It doesn't break the laws of discounted sort of value analysis. It just doesn't have cash flow. You have to think about it a little bit differently. But what that tells you is we're still very early at Bitcoin, right? Again, less than 10% penetrated into its first major market. It could run 5x and still be relatively early. And I think that's the sort of analysis that many institutions are doing. And I think it's going to penetrate that faster than many people think. I don't think it will first go to retail uses. Like, I don't think I'll be buying coffee with Bitcoin anytime soon because it's appreciating 100% a year on average over the last 10 years. It's a very expensive cup of coffee. If I look at the world today, I see us moving toward an increasingly multipolar world. We've been in a dollar-based world for 40 years, where all international trade effectively is settled on petrodollars or the US dollar rails. I think we're moving to a world where it's settled in multiple different currencies, in the US dollar, in the Chinese yuan, maybe in other currencies. You sort of see this activity. I think within that world, some countries will want to settle trade in a non-political currency. And the only non-political currency that exists that's functional for trade, that can move at the requisite speed, that doesn't have to be shipped by airplane, the only one that exists is Bitcoin. So I think its first medium of exchange is going to be as a non-political currency connector between countries that don't want to settle in dollars or in yuan or in any other currency. I think it'll be a bridge currency. And then eventually, when it's more mature, it'll start to find use in what more traditional retail payments. But we have to get to that point eventually. I think when we do, you'll see it's more widespread used than many people expect right now.
In his concluding remarks, Matt Hougan persuasively explains why Bitcoin has genuine, enduring value and how it all comes down to the service it offers. Bitcoin is more than just hype, in contrast to trends like tulip bulbs or Beanie Babies. It provides consumers with the capacity to digitally keep their wealth without the necessity for a bank, which addresses a significant contemporary issue. Bitcoin is the only means to access this extremely powerful service in a world where governments and banks control the majority of the financial system. You cannot pay a subscription fee to the firm that created Bitcoin, unlike software. Rather, you can benefit from Bitcoin by possessing it. Bitcoin's value increases with the number of users that desire this exclusive service. For this reason, Hougan thinks its price will continue to increase. Hougan uses the roughly $21 trillion value of the gold market as a benchmark for estimating Bitcoin's long-term potential. At the moment, Bitcoin is just under 10% of that, at just under $2 trillion. Therefore, Bitcoin might yet increase 5 to 10 times from now and still be in its early phases of development if it is generally recognized as a digital store of value, similar to gold. Additionally, he says that Bitcoin is likely not going to be used to purchase coffee anytime soon because it is too precious and unpredictable for that purpose. However, Bitcoin may eventually play a significant role as a neutral, non-political global currency in a world where international trade is growing more complicated and multipolar. Remember to like this video, subscribe to the channel, and enable notifications if you thought his viewpoint was helpful so you don't miss any updates. We'd love to know what you think about the future of cryptocurrency markets, so please share your ideas in the comments section. We appreciate your time and hope to see you in the next video.